Okay, class, in this lesson, you're going to learn to reconcile a checking account with a bank statement by hand or manually, and also by using a spreadsheet. So let's go ahead and get started. All right, so how do checking account users make sure that their records are correct? Okay, a customer keeps a record of all transactions concerning a checking account in a paper or electronic check register. So the process of making sure that your records are correct is called reconciling your account. Now there are certain terminologies that we should probably cover first, and that is, the first one is the account number. Okay, account number is unique to a particular account, and it appears on all of your checks. It's also noted on your deposit slips, or if you write a deposit slip, you will have to include an account number, and it also shows up in your bank statements. Okay, now bank statements include all of your transaction in a 1 month period. Different banks have different statement periods, and statement periods are periods that indicate the dates in which the transactions occurred. So for example, one bank might say the statement period is from the 1st of January to January 31st. Other banks might have statement periods that start on January 3rd and end on February 2nd. Okay, so you're going to want to keep a note or be aware of how banks manage their statement periods. The starting balance is a term to determine the amount of money in an account at the beginning of the statement period, and then the ending balance would be the balance or the amount of money in the account at the end of the statement period. Okay, the deposit section in your statement shows the money, all of the money that was put into the account during the statement period. Any deposits that you make that are not in the statement are considered outstanding deposits. And then checks that you write that don't appear in the statement during that statement period are considered outstanding checks. Okay, so again, balancing, or the term reconciling a bank statement, means that you're checking your own records against that of the bank. And this is a very important process to go through every month. More and more bank customers don't do this, and the risk of not doing it is that you could have, for example, a fee applied against you by the bank and you don't even know it. Okay, and so when it comes to money, you want to make sure that you're aware of every transaction that takes place in your account, not just with your own records, with your own transactions, but you want to make sure that you're aware of anything that the bank does to your account. Okay, now let's go through the process of reconciling your bank account. Okay, so in front of you, you have a picture on the left, which is a sample of a bank statement, and then on the right is your check register. So these are transactions that you have been maintaining throughout the month. Okay, now what we want to do is list any outstanding withdrawals. So these are withdrawals that you have made that the bank does not include in the statement period, but is in your check register. Okay, and we're going to also do the same thing for outstanding deposits. So deposits you've made into your account, which you've noted in your check register, but is outside of the statement period. Okay, so if we took a look at your check register, we know that this is your check number, the date of the transaction, the description of the transaction, and the amount, whether it's a withdrawal or a deposit. Okay, now, and then of course from the previous lesson we learned that we kind of maintain a running balance so that we know what our starting balance is as well as our ending balance. Okay, notice that our ending balance of $641.13 is what our check register says, but you will note that the statement balance does not show the same amount. Okay, so now the question is, even though these balances are different, is it correct? And the reason that these amounts are different is because the statement has a different period, right? The statement period is from November 1st to November 30th, whereas you have transactions running from October 13th all the way to December 1st. So those periods are not the same. And in this exercise, we are going to reconcile or make sure that all of these transactions are correct. Okay? The other thing that to note, which we didn't mention in the previous lesson, is that these check marks are made to indicate that you already accounted for those transactions in a prior reconciling process. Okay? So we don't have to worry about those. So let's go ahead and start at looking at the bank statements. Okay? So if you notice, on the November 5th, the bank statement said that you made a deposit in the amount of $35. Okay? So we're going to look down here, and we see that we made a deposit of $35. Okay, so that's good. So we're going to check that off as a transaction that has been accounted for. Then we look at the next transaction in the statement. On November 11th, there was a deposit for $100. Okay, and so we're going to go ahead and check that off. We see that this is $100 over here. This is November 11th, so we can go ahead and check that off. Then we look at the next transaction, and we see that there was a withdrawal on November 13th, check number 1770 in the amount of $158.08. So we're going to look down here and look for $158.08, check number 1770. Okay, so that is done. Okay, now as we're going through this process, you'll notice it's very, very tedious, but this is very important to do because you want to check to make sure that everything is correct. Okay. The next transaction is another withdrawal for check number 1768 in the amount of $46.50. So we're going to look down here. We see that there's an amount of $46.50, check number 1768. All right. So we can go ahead and check that off. That's been confirmed. And we go down to the next one, November 19th. A check was made for check number 1769 in the amount of $74.64. And we see that amount right here. There's the check number, 1769. Okay, notice that the date doesn't always match, but it should be relatively close. Okay, we noted this for October 21st. Here, it's November 19th. Okay, so sometimes there will be a difference because it takes time for the amount to clear. Sometimes the payee will hold on to the check for a while and not deposit it for a couple weeks. So we can't always rely on the date. So that was $74.64. So we're going to go ahead and check that off. And then the last transaction on the statement is a withdrawal for check number 1765 in the amount of $19.50. Okay, so we're going to look at that. And here's the transaction. So we're going to go ahead and check that off. Okay, now you will see there are some transactions that are not in the statement that we have not accounted for. Okay, this is considered an outstanding withdrawal. So we're going to go ahead and note that amount in the outstanding withdrawal column. So that's not included in our reconciliation process or in the statement that the bank statement has given us. We also have a withdrawal in the amount of $18. Okay, and so we're going to go ahead and list that as an outstanding withdrawal. Going further down the list here, we see that there's also a withdrawal or a check of $29.10, which is not on the bank statement. So we're going to go ahead and write that down. And continuing down, we also have another check made out to Living Color Lab for $15. That's considered an outstanding withdrawal. And finally, we have a deposit in the amount of $125, which has not been noted in the statement. So we will go ahead and put that under the outstanding deposit column. We'll write $125. Okay, so then the next step is to add all of these numbers up. Okay, so our total outstanding withdrawal comes out to, let's see, 2, 4, 5, 6, 7, 8, 9, 10, 11. Okay, $112.10. Our total for deposits is $125. Okay, So to reconcile this, we're going to take the ending balance on the statement, okay, $628. So I'm going to write this in green. So $628. We're going to add $125. This is our outstanding deposits. Okay, I should go ahead and label this ending balance and balance in the statement. This is outstanding deposits. Outstanding. And we're going to subtract this is our withdrawals, outstanding, and our net should equal the balance in our register. Okay, so if we go ahead and enter those in the calculator, we find that the ending balance is $641.13. Okay, so you'll notice that this amount here matches this amount right here. Okay, so we've essentially reconciled and we made sure that our records and the bank statement records are exactly correct. Okay, now in example number 2, we would do the same exact thing, except we would reconcile this on a spreadsheet. Okay, and we would use formulas and statements to model the check register balance process. Okay, so here are the components doing this on a spreadsheet, and then in the next example I will show you the steps on how we actually do this. Okay, so we're going to say that the statement ending balance is the letter A, the total deposits outstanding is letter B, total withdrawals outstanding letter C. Okay, so then we would calculate the revised balance D, and then we would compare that to the check register balance R. Okay, so our revised statement balance D, okay, would be equal to the statement balance plus the total deposit outstanding minus withdrawals outstanding. Okay, and this amount, the revised statement balance, should equal the check register balance. Okay, so this formula is what we would use, okay, to reconcile these two numbers. All right, so let's take a look at how we would do this mechanically. Okay, so in example 3, Marina and Brian have a joint checking account. Okay, they have a balance of $3,839.25 according to their check register. The balance on the bank statement says that it is $3,450.10. And so here are the differences. Not reported on the statement, so these would be considered outstanding. Deposits of $2,000, $135.67, $254.77, and $188.76. Okay, and then 4 checks were written, but not on the bank statement, so these would be considered outstanding withdrawals: $567.89, $23.83, $598.33, and $1,000. Okay, so we are going to reconcile the bank statement using a spreadsheet. So let's go ahead and note those amounts. Okay, so we're going to go to the spreadsheet here, and we have a column for outstanding deposits and outstanding checks. So we're going to go ahead and put in those amounts. Okay, so our outstanding deposits were $2,000, $135.67, $254.77, and $188.76. Okay, and then our outstanding checks that were written were $567.89, $23.83, $598.33, and then $1,000. Okay, so what we're going to do is total all of these up, and so we're going to take the sum of the cells here and get a total. And so we have outstanding deposits totaling $2,579.25. $2,190.20. We're going to do the same for the checks, $2,190.05. Okay. Now we're told that they have a check registered balance of $3,839.25. Okay, and the bank statement balance said that it was $3,450.10. Okay, so then we want to calculate the revised statement balance. So the revised statement balance is going to equal the statement ending balance plus our outstanding checks or deposits. So that's going to be $2,579.20 or cell B8. And then we're going to subtract outstanding checks or withdrawals. That's going to be $2,190.05 or cell C8. Okay, and if we do this correctly, that amount should equal the check register balance of $3,839.25. So it does. Okay, so moving forward, once you've developed the spreadsheet, you can use this to reconcile your check register against the bank statements by indicating outstanding deposits and outstanding checks. Okay, so that is the process for reconciling your account. Hopefully this made sense to you. If any of this was confusing, please go back to the beginning of the recording and listen to this again. Thank you.